In this video, we will be covering following topics. What is the meaning of insurance? Types of insurance, principles of insurance, difference between life insurance and general insurance, types of life insurance and types of general insurance. What is the meaning of insurance? An arrangement by which a company or the state undertakes to provide a guarantee of compensation for specified loss, damage, illness, or death in return for payment of a specified premium. Now, let's see which are the different types of insurance. There are two types of insurance. First is life insurance, and the other is general insurance or non life insurance. Now we'll see principles of insurance. First principle is principle of utmost good faith. According to this principle, the insurance contract must be signed by both parties, that is insurer and insured, in an absolute good faith or belief or trust. They should not hide anything from each other. Then the second principle is principle of insurable interest. The principle of insurable interest states that the person getting insured must have insurable interest in the object of insurance. That means you cannot get the insurance policy for the neighbor's car or for the neighbor's kid. You shall have the insurable interest in the property or the person where you are taking the insurance plan. The third insurance principle is principle of indemnity. According to the principle of indemnity, an insurance contract is signed only for getting protection against unpredicted financial losses arising due to future uncertainties. That means that the role of the insurer is to provide the good to the loss happened. The next principle, principle number 4, is principle of contribution. It applies to all contracts of indemnity if the insured has taken out more than one policy on the same subject matter. According to this principle, the insured can claim the compensation only to the extent of actual loss, either from all insurer or from any one insurer. If one insurer pays full compensation, then that insurer can claim protection proportionate claim from other insurers. So if your car has 100,000 rupees of principal indemnity, then you can take maximum up to that amount. The next principle is principle of subrogation. According to the principle of subrogation, when the insured is compensated for the losses due to damage to his insured property, then the ownership rights of such property shifts to the insurer. Principle number 6 is principle of loss minimization. According to the principle of loss minimization, insured must always try his best to minimize the loss of his insured property. In case of certain events like a fire breakout or blast, etc., the insured person shall call the police or the fire brigade, and he should put all his efforts to minimize the loss to the product or the property. And the next and the last principle is principle of causa proxima or nearest cause. Proximate cause is concerned with how the actual loss or damage happened to insured party and whether it is a result of an insured peril. It looks for what is the reason behind the loss. Is that is an insured peril or not? Now the difference between life insurance and general insurance. Life insurance is an insurance contract which covers the life risk of the person insured, whereas the general insurance is anything which is not covered under life insurance like motor, house, health, etc. They are general insurance. Life insurance is a form of investment, whereas general insurance is only a contract of indemnity. Life insurance is for short or long term, whereas general insurance is short term for say for 2 months, 1 year, or 3 years. In life insurance, premium has to be paid over the year. However, in general insurance, premium has to be paid on lump sum. The life insurance amount is paid either on the occurrence of the event or on maturity, whereas in the general insurance, loss is reimbursed or liability will be repaid on the occurrence of uncertain events. In life insurance must be present, the insurable interest must be present at the time of contract, whereas in general insurance the interest must be present at the time of contract as well as at the time of loss. And the last is policy value. In life insurance, it can be done for any value based on the premium policy, whereas in the general insurance, the amount payable under the under the insurance contract is to the actual loss suffered. So the maximum amount you get is the loss happened. Now, types of life insurance: first is term insurance. It is the pure insurance form. It pays your nominee the sum insured in case of your demise within the policy term. It does not have any sum assured or maturity amount. Premium is very low. Second is endowment plan. These are insurance and investment plan. A certain portion of the premium is paid for protection of the life, and rest amount is invested in low risk debt instrument. So at the time of maturity, the insured person gets a predefined amount. Third is unit linked insurance plans. These are newly introduced plans. A couple of decades ago they were launched. ULIPs offer life protection as well as the opportunity for capital appreciation by investing in various funds of varying degree of risks. Just like endowment policy, in ULIPs, a certain portion of the premium goes in providing life cover. They generally invest in equity market, therefore the return is not predefined, it depends on the market return. It has certain lock-in period, say 3 years or 5 years. Up to that time you cannot withdraw the insurance. Then we come to the general insurance, types of general insurance. The first and the important is health insurance. A general health insurance plan is an indemnity plan that pays for hospitalization expenses up to the sum insured. While you can avail a standalone health policy, family floater plan provide coverage to all the members of your family. Next is motor insurance. Motor insurance covers your vehicle against accident damage, theft, vandalism, and so on. The form of insurance comes in two forms: comprehensive and third party. Comprehensive covers 360-degree of your car, whereas third party gives you protection from third party damages happened due to your vehicle. Then the home insurance. A home insurance policy protects your home and its belongings from the damage suffered due to man-made or natural disasters. Some home insurance policies also provide coverage for temporary living expenses in case you are living on rent due to your home undergoing renovation. Then one other important general insurance policy is the travel insurance policy. A travel insurance policy protects you against losses suffered